My name is Robert Kiyosaky. I am fourth-generation Japanese American, born and raised in Hawaii. My mother was a registered nurse, and my father had a PhD in education. He was also the superintendent of education for the state of Hawaii. What broke my heart was that although my mother and father had a great marriage, the only time they ever fought was about a subject called money. In 1970, at the age of 50, my dad was downsized. He never recovered from it. I swore my life would be different. What do I mean by financial intelligence? So when we go to school, we learn to read these things, but we never learn to read these, financial statements or annual reports. We never learn financial literacy in school.
I founded a company called Prime Cable in 1979 with two other people. Today that company, if it were sold, would sell for about $1.6 billion. I'm a graduate of the University of Texas. I got an MBA in finance. For the last 8 or 10 years, I've fired probably well over 200 people. Most people that I know haven't bothered or figured out a way to go learn the rules so that they will spend the time and understand how to go make money with money. One of the things that is very important to me is that my children especially understand the rules of the game of money so that they will never be one of the unfortunate statistics who gets fired.
When I studied accounting in school, it was possibly the single most boring subject I ever studied. So I had to create a system that was easy enough for me to understand. So these are the basic forms necessary for financial intelligence. One is called an income statement because it has an income and expense, also called a profit and loss statement. There is also a balance sheet, and the balance sheet has assets and liabilities. And these are the very basics for financial literacy or financial intelligence. I soon realized the main cause of financial struggle was due to confusion between the definitions of an asset and a liability, confused by the dictionary's definition, so I made up my own. My definition of an asset is something that puts money in my pocket, and my definition of a liability is something that takes money out of my pocket. So what caused my mom and dad to struggle financially is my dad, because his banker and his accountant and his real estate agent told him a house is an asset. By this definition, it's actually a liability. Simplify that even further. Working, assets will feed me, and a liability will eat me. So the most important thing about being financially literate, or the ability to read numbers, is understanding a thing called cash flow. I can tell the difference between a poor person and a middle-class person by simply looking at their income statements and balance sheets and figuring out which direction the cash is flowing. Generally, a poor person, all they have is a job. The income comes in from the job, goes down, they pay their rent, clothing, and a little food, and goes out the expense column. The cash flow pattern of a classic is in this way, but with a middle class, they probably have a mortgage, they probably have car payments, they probably have credit card payments. It comes up again through the expense column and then out this way. The cash flow pattern of the rich flows from the asset column into the income column. So while the poor and the middle class are focusing on income, what the rich are focusing on is the asset column. And the asset column is the great secret of the rich. So for those of us who weren't born rich and what we have is a job, every time money comes in, this is the point of choice. This is where you make the decision to be rich, poor, middle class. If when this dollar comes in and you take the dollar out this way, then it's your decision. If you go and buy yourself a new T-shirt, cappuccino, a new lunch, a poor person. If instead, when you get a pay raise or more money, what you do is you go and buy a bigger house, a new car, or you take a vacation on your credit card, then what you are choosing to do then is to be a middle class person. And if you choose, instead, when the money comes in and you choose to put it in the asset column, then you make that decision to be rich, poor, middle class. By putting in the asset column, at this point, you're choosing to be a rich person. But the choice is up to you, nobody else. A gentleman named Ray Kroc, who was the founder of McDonald's, came to speak to the class, the MBA class, and asked the class, he said, "Ladies and gentlemen, what business am I in?" "Well, Ray, of course we know what business you're in. Your business is hamburgers." And Ray said, "No, my business is not hamburgers. My business is real estate." So what Ray was saying was that his profession was in sales. He basically sold hamburgers. But his business was down here. His business was real estate. So your profession is you working for money. And what your business is your money working for you. And the main reason so many people struggle financially is they're not minding their own business. They're minding somebody else's. Is over here in your profession or your job or being an employee, you're working for somebody else. You're working for the shareholders. Over here, the first person you're working for is the tax department. Here you work for the government. And over here, if you own a house, you're working for the bank because you got a mortgage. So if you want to be rich, happy, and successful, you've got to mind your own business and not work for everybody else. What causes financial struggle is that most people who believe in hard work, what they do is they focus on their job. They have, husband and wife working, and maybe one of them will take a second job, so you have 3 incomes. And so what they're focusing on is income here. So their income goes up, and they believe in hard work. The problem with hard work in the income column is that as your income goes up, so does a thing called taxes go up. So you pay more in taxes, but you feel you got this raise and it's worth it, and so what you do is you go out and buy a big house or a new car or a new boat because your banker or your accountant tells you that it's an asset. And so this goes up here. And so you're working harder, your expenses are up, your liabilities up, and bam, suddenly you're downsized. And what happens then is you lose your income. But does this go away? The answer is no. Does this go away? The answer is no. And that's what causes financial insecurity or financial struggle. The answer is, if you had focused like the rich do on not working for money but having money work for you, even if you lost your job, your assets will continue to feed you. So having a whole stack of liabilities and no assets, that's what causes financial struggle or financial insecurity. So what most hard-working people do is they focus on their income, working hard at their job, income comes in, and the first line of expense for most people is a thing called taxes. But what the rich do is by having their income come from the asset column, the income comes up this way, and the way the rich avoid taxes is just like a fuel filter on a gas line. What the rich do is they attach a corporation or several corporations. And what a corporation then does is bleed off as many expenses as possible before their income is taxed. And that's how the rich avoid taxes, where a person who is an employee or a W-2er is taxed first. So one of the secrets of the rich is how they print money. One example is, let's say they buy a house in foreclosure through their attorney's office. They pay $30,000 for it. They mark it up to market value, which is, let's say, $60,000. So they sell it for $60,000, and what they have is in $30,000, which they take back in the form of a note or an IOU. So they've created now $30,000 in their asset column from this one transaction. Or another way of doing it is you take a piece of land, about 80 acres. I paid $100,000 for this whole chunk of land. There was a house on the property, so I chopped off 4 acres and sold the house for $145,000. So I made $45,000 from just selling the house and 4 acres. I then divided up the land into 3 parcels, selling each parcel for $100,000 each, again taking it back in a note or a form of an IOU. So over here I had now invented $300,000 in my asset column. Or another example I do is called an IPO, initial public offering. I put $10,000 seed money into a company I'm forming. For 1 penny a share, $10,000 comes out to 1 million shares. The moment the company goes public, let's say it goes up to $1, so 10,000 shares then goes to $1 million, which I don't have to pay taxes on until such time as I cash the money. So these are some examples of how the rich print money. The economy goes, ultimately, whether you're poor, rich, or middle class, the choice is up to you.